Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be focusing on three things. Firstly, I'm going to look at this 12-year indicator that has never been wrong, as the title suggests, and why that's a really big warning to the bears who actually think that we're going to go back down to the 15.4K. I'm also going to have a look at the 60-day cycle to tell us exactly where we are and where we're heading according to this flexible tool that we've got. But I'll be starting the video off to give you details about the members only video section that we're starting to cover the Bitcoin miners. I'm going to be looking at the wonderful opportunity that the Bitcoin miners present, which I'll be covering in the members only section. If you remember a couple of videos ago, I asked people if they would be interested in having a members only videos to cover the Bitcoin miners and the opportunity that it presents. And more than 50% of the comments were actually expressing an interest in such a section. So I'll give you the details on that. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, before I begin, the usual polite reminder, and that is that please remember everything in my videos is just for educational purposes. You shouldn't take anything as financial advice, so please do your wider research before you make any investment decisions. Okay, so with that out of the way, I'm going to start off with this quotation, which is going to lead us nicely into the membership only section that I'm going to be starting very, very shortly to cover the wonderful opportunity that presents itself in the Bitcoin miners. And the quotation basically says that there is nothing more expensive than a missed opportunity. So what do I mean by this missed opportunity? And what is the opportunity here? Let me take you to the marathon chart back in December 2020. And I've marked up this date here, which is the 3rd of December 2020. This was the time when I actually bought Marathon Digital Holdings. This was a Bitcoin miner that had just entered into Bitcoin mining around about a few weeks before this period. And if you measure the actual increase of its price from the 3rd of December over here to the top of $84 where it actually topped out, that tells you that it increased by 14 times. So my investment over here from the 3rd of December to the top was worth 14 times. I did unfortunately run it down a little bit over here, but I'm just showing you the potential of what a Bitcoin miner like Marathon can increase to from the end of the bear market to the actual top at the end of the bull market. And if you compare that with Bitcoin, the increase from the 3rd of December, the same exact date, to the 69,000 top for Bitcoin was just 2.5 times. So what this is telling us is that the Bitcoin miners present a leverage play of around about 5 or 6 times the Bitcoin price. So when the Bitcoin price goes up by an X amount, the Bitcoin miners' prices go up by around about 5 or 6 times that amount. So what we have is an absolutely wonderful opportunity to ride the bull market with the Bitcoin miners, knowing that the Bitcoin miners over here are going to be a leverage play for the next 2 to 2.5, 3 years. I actually presented this opportunity in a video on the 6th of December in 2020. Having bought the Marathon Digital Holdings on the 3rd of December, I decided to share that opportunity with everyone here on the 6th of December. And I did this video here, which covered the 3 alts that I was looking at. And one of them was obviously Marathon Patent Group here, because that's what it was called at that time, Marathon Patent Group, and in between they've changed their names to Marathon Digital Holdings. And the price at that time, as you can see, was $5.40, and it went all the way up to $84. So it went up by about 14 times, while Bitcoin price went up by 2.5 times to the end of the bull market. If you want to watch this video from then, I'll leave a link in the video below. The question you may be asking is, why am I setting up a members only? The reason is very simple, that in a lot of my videos in the past, I've had a lot of requests for me to cover the Bitcoin miners. And whenever I've done a Bitcoin miners video, unfortunately, the views I get on them is usually around about 50 to 60% of the normal videos that I do on the Bitcoin. So obviously it's better for me to concentrate and focus on what most people like. And I understand that because obviously these Bitcoin miners are a very high volatile play. So I understand that Bitcoin miners isn't for everyone, and that's fine. Everybody has their own strategy and their own risk reward, which is unique to them. So for those people who are really interested and want to look at this great opportunity that it's presenting itself, and for me to make it worthwhile for me to set up, then a members only section is actually the right way to go. Obviously, I've never done a member section before, so I had a look at what other people charge for such a members only section. And when I looked around, the prices varied from someone like Alessio Rastani, who you may watch the videos. I like his videos, and he has a members only section which he charges £100 a month, and at the moment he's got a 50% discount to £49.99 a month or something like that. The lowest I came across was £4.99, and there were others obviously in between that. So as a gesture of goodwill, what I've done is to set the members only videos at the lowest price, which is at £4.99 per month. And one thing I want to actually bring to your attention is that there is no contract, there is no obligation, and you can cancel at any time, totally hassle-free. And I also want to let everybody know that by doing the members only sections, it does not affect my normal videos, the ones I do twice a week on the Bitcoin. So everything else remains exactly the same. I will still keep on posting on Twitter, doing the normal videos twice a week on Bitcoin, the 60-day cycle, etc., and all the usual technical analysis. So nothing will be affected. So the members section will only be an extra bit that I will be doing for those people who are interested in the Bitcoin miners and to take advantage of this wonderful opportunity. So what do you actually get for £4.99 per month? Well, my intention is to do a Bitcoin miners video once a week, mostly on a Wednesday, so I should be able to do 4 per month, but certainly I can guarantee 2 videos per month, which means that there will be a video for the price of 1 coffee. And in between my videos, if there is anything relevant or important going on with the Bitcoin miners, I will also post the information in the community tab on my YouTube video. So if you go to my YouTube video channel, then you'll see the community tab, and in there will be a members only section for people for the Bitcoin miners. So the things I will be covering in the Bitcoin miners section will be the technical analysis, which will be similar to what I do with the Bitcoin analysis. So I'll be looking for opportunities for swing trades, looking at the candlestick patterns, looking at the support and resistance lines, breakout opportunities, that kind of thing. What I would suggest is try it out for 1 month, and if it's something that's not for your liking, then just cancel at the end of the month. But at least then you've had a look at the opportunity and to see whether you want to carry on with that opportunity. So I can see you asking, well, how can we join? If you go to any of my videos, you'll see that next to the subscriber button, obviously this is for me, for my analytics and edit video, but normally there's a subscribe button over here, but next to it is this join button here. So if you click on the join button, you'll see all the details there to join. So just to let you know that I will be doing my first Bitcoin miners video tomorrow. So if you want to start this journey and take advantage of this wonderful opportunity from the very start, then join the Wisdom Bytes members only section now. And remember, there is nothing more expensive than a missed opportunity. And this opportunity is really for the next 2.5, 3 years. So when Bitcoin actually tops out around the end of 2025, we've got just under 3 years to take advantage of this leveraged growth in the Bitcoin miners over the Bitcoin price. Okay, so moving on to this 12-year indicator, which has never been wrong, and what that is telling us currently, and why the bears should be actually heeding this warning that I'm looking at now. This indicator is the Bitcoin 350 daily moving average, and within that, if you have a look, you'll see all these, and I've taken out a lot of the other noise within this indicator just to highlight the things that are very important. The most important thing to recognize here is that once we had a mini bear market within the first cycle back in 2011, you can see that came right to the bottom of this indicator over here. And from then onwards, the price just took off all the way up to the next peak that we got in April 2013 at the time. And that continued right up to the end of the first 4-year cycle back in November 2013 over here. And you can see what happened after that. So after we topped out in December 2013 over here, we had this bear market, and once again, the price came back to the bottom of this 350 daily moving average twice over here. And once again, that set off the bull run for the next cycle. And if we move to the right over here, you can see that that took us all the way up to December 2017, up here, when we culminated in the price of 20,000. So far, this has worked in 2 previous cycles. So will it work after 2018? Well, after this top here, well, let's have a look. Once again, at the bottom of that bear market, the price came back and double bottomed here exactly on that indicator. And once again, as you can see with the price, it took us all the way up to the $69,000 mark. So we went to the first top here in April 2021 and then to the second top here at 69,000. And the question is, has it repeated itself over here? If we have a look, it looks quite clear that we've bottomed here once and now we've bottomed twice over here. And the question is, if the cycles repeat as they have done in the previous 3 cycles, but then with a high degree of probability, it looks as though we're at the beginning of the next run to the next peak, wherever that's going to be, around the end of 2025. The other thing to note on this indicator is that all the peaks in the past have been above this blue line over here. So we had our first peak here, the second peak over here, the third peak above the line over here, the fourth peak at the end of December at 20,000 over here. So the question is, would we have a peak in the current cycle? Well, we got to the 64,000 and it actually peaked at the pink line over here. And the next peak at 69,000 didn't even reach the pink line over there. So there's 2 ways we can look at this. Either that the past peaks above the blue line are no longer going to be valid, and that the next line below it, i.e. the pink line, is now the more valid line over here. So that tells us that what the possibilities are going forward, that either we're going to peak back at the blue line, wherever that's going to be, or the pink line, wherever that's going to be. But one thing is for sure, as you can see, the lines are actually pointing down at the moment. And when the peaks are reached, the lines are actually pointing up. So we know that somewhere along the line, the lines are going to go back up again. And wherever they're going to be, we're going to either peak at the blue line or the pink line. So only time will tell when we actually get there. But certainly it's very interesting to know that this indicator seems to have actually predicted all the bottoms of the previous troughs in the market. Okay, moving on to the 60-day cycle. Before I do the analysis on this, I just want to actually talk to you about the 60-day cycle. First of all, the 60-day cycle template, if that's what we can call it, was actually introduced by somebody called William Bressart back in 1995. And he noticed that some of the prices on certain assets worked on a 30-day cycle, some at 60-day cycles, and some at actually 90 days, etc. And those people who have been looking at the Bitcoin prices have noticed that the Bitcoin on the whole has been running on a 60-day cycle. Now that is not a rigid number. You can't just put a 60-day cycle and expect the price to go according to our 60-day cycle. Because always remember, there is no magic indicator which tells us what tomorrow's Bitcoin price will be. So what we do is we use a variety of techniques or a variety of indicators to give us an edge, i.e. a probability that's higher than the 50-50. Because that's what markets are. Markets are nothing to do with certainties and guarantees. They're all about probabilities. And it's our job as technical analysts to increase our probability to determine the direction of the trend. And these tools, like the 60-day cycle, help us to do that. And we must never get stubborn or inflexible that once we put our 60-day cycle, that we shouldn't be willing to change when the narrative of the price action for Bitcoin changes. Because what the 60-day cycle does is adds a unique element of timing, i.e. the 60 days, to help us determine the trend, and we have to be nimble enough to be able to use this cycle to work around the Bitcoin price. Because as the new information becomes available, we have to respond by changing our narrative. And one of the main principles of the market and the rules about the market is that the market has a habit of punishing you if you are stubborn with your narrative. So I know that in the last video, I made some adjustments to the 60-day cycle, and that's because the new information that became available in the last week or so has guided our hand to do that. And I gave the reasons in the last video of why we were going to change these cycles a little bit in order to help us in the future. So what we've now got in the 60-day cycle is that the cycle ended over here. When you look at the price action, it looks with a high degree of probability that after the mid-cycle here, we made a high and then came back down into the 60-day cycle low over here. And we started a new cycle at that point. And this is the midpoint now of this current cycle around about the middle of March. So what we can do and expect is that for the price to go into the mid-cycle point here and go higher past the midpoint to make a right translated cycle. before we get into the 60-day cycle low for the correction that's to come after that. So currently what we're doing is we're actually consolidating at quite a high level here, and it looks like it wants to break out here. But there's one price I want to actually bring to your attention, that if we break below that, then it may look as though that it's going to go much lower than that. So this is a price that you've got to be aware of. It's a price that's right on the bottom of this, and that's over here. If you have a closer look, the bottom of this price here is at 21,400. So if we break the 21,400 on a daily candle here, then that means that we've topped out at the 25,000. Until that happens, there's plenty of room for that to happen. But until that happens, we're still in this uptrend over here. Because if you put the 3 EMAs on, you can see quite clearly the blue line. We're still riding the 8 EMA all the way up here. Yes, we broke that down to have this correction, but we're now still right on the support line of the 8 EMA. And if we take these lines out, we can see that the inverse head and shoulders, which was developing over here, at this neckline of 25,200. Once again, we can have a look at this in two ways. Firstly, we've got the left shoulder over here, we've got the head, and then we were waiting over here for the right shoulder to develop over here. Now, they're never always perfect, so again, we've just got to be flexible and fluid to be able to interpret this. So the question is this over here a narrow right shoulder in comparison to the left shoulder? Or are we still going to be coming back down and creating either a shallow right shoulder or a deeper shoulder, just like the one on the left-hand side? So these are the options that Bitcoin has over here. But certainly, if you look above, you can see that there isn't much price action. When the price came down here from the $31,000, $32,000 mark, it came straight the way down, and there wasn't much price action in between. So what you might get is that once we break the 25,200 level, we'll have a very quick run to this level here at 28,000. So there should be very little resistance in between that. And many people are wondering why we've stopped at the 25,200. Obviously, we've got this support line here and resistance over here. So this was quite a natural place. And as we've been going up here, I have said many, many times that the next stop is going to be 25,200. And that's exactly where we've been. But once we do flip this price action over here, then 28,800 is a natural place to come back to based on these support lines over here. Okay, so we'll leave it there. Thank you very much indeed for watching. If you want to catch me on the members video tomorrow, then all you have to do is to click on the join button and become a member. And if you found value in the video, then please do remember to like and subscribe if you haven't already done so. If you want to leave any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.